Hi everybody, I'm Michael Reinking coming to you straight from the floor of the New York Stock Exchange with your weekly brief. As a reminder, this is for informational purposes only, and the NYSE does not recommend any investments or investment strategies. So as we've been talking about, the S&P 500 has been trading in a very tight range since the beginning of April between 40.50 and 41.75. Now over that time frame, we've seen some deterioration of the breadth as the strength in mega cap tech stocks has been masking some of the weakness beneath the surface. Now there have been three primary concerns that have been weighing on sentiment over that time frame: the lingering banking concerns, the looming debt ceiling, and fears of a hard landing. On all three fronts, we've gotten some positive updates this week, which has helped the S&P 500 rally, and once again, we're retesting the upper end of that range. So earlier this week, Western Alliance provided a positive deposit update, which has helped the regional banks rally, with the ETF up about 10% this week. The debt ceiling negotiations continue to move forward. There is some hope that we could have a framework hashed out potentially as early as this weekend. And in terms of the economic slowdown concerns, this week's retail sales numbers, while it did miss expectations, broke 2 consecutive months of declines, and the earnings from major retailers have come in better than feared. They're not perfect, but they're not suggesting that consumer spending is falling off a cliff at this point. Now the other thing that's testing the upper end of the recent range is yields. So we have the 2-year yields back around 4.25%, the 10 years back around 3.65%, which is the highest levels we've seen since the beginning of March, when the banking crisis began to unfold. That's come as we've had some hawkish Fed commentary, which is suggesting that given the recent economic data, a potential rate hike in June is still on the table. Last week, the probability for a rate hike in June was sub 20%. We're back up around 40% at this point. Now, as we look forward, there is another key catalyst on Friday, as we have Fed Chair Powell and former Chairman Ben Bernanke are going to be speaking on a panel about monetary policy. So that'll be very closely watched. It is also options expiration. And as we look forward to next week, the key economic data will be on Tuesday, as we have the flash PMIs following some mixed regional survey data this week. Wednesday, we have the FOMC minutes. And then Friday, we have personal income and spending and PCE, which is the Fed's preferred gauge of inflation. And then we also continue to hear from late cycle retail and tech companies. So that's going to do it for this week. As always, make sure to check out NYSE.com for our daily commentary. I'm Michael Reinking, and this has been your weekly brief.